Hey guys, this is a market update. I think what we've just done is put in a higher low right here, which is obviously fantastic news for the rest of this bull market. It looks very good technically, right? So we've got 3 weeks of green candlesticks climbing out of this support zone. You can see that the previous resistance here, where we rejected from that a few times, we broke out, and then we've come back to test it, and we have bounced. Now the 3rd week higher. So from a technical perspective, it's very, very positive price action. And you can see these lows coming in, right? And they're just getting higher each time. So the uptrend continues, even though for the most part, Bitcoin is pretty boring right now, because if you looked at Bitcoin almost a year ago, it was 100K. And now almost a year later, we're basically 100K, right? Bitcoin's one of those assets which kind of doesn't do anything most of the time. It either goes sideways or it just kind of trends down a little bit. You get some selling, right? And then eventually, as it breaks out, people start to realize again, oh yeah, that Bitcoin, and they start chasing it higher and it breaks out a lot. That's where you get these big breakouts, right, from these resistance zones. So what's going to just push us up above the previous all-time high? Potentially, I don't think it will happen until this gets sorted out. So as you can see here, another shutdown looming as GOP Democrats clash over stopgap funding bill. The government needs to fund itself, and they're going to argue about that for the next few weeks. The reality is, it does affect markets. I've seen this many, many times before, where especially Bitcoin, which is very sensitive to these things, tends to, just come off a little bit or be a little bit soft or just consolidate whilst this is happening, because this does affect liquidity, it affects markets. So this will pass, and there will be a bill to fund the government, right? They always do that. Left versus right, doesn't matter. They always fund the government. What are they going to do? Just not pay themselves and shut the thing down? No, they're always going to fund themselves. They're always going to pay themselves. There's always going to be a bill that goes through. We just have to wait for that to happen. Usually, after that is sorted out, you actually tend to see a little bit of relief in markets anyway. So Bitcoin maybe can climb if we get some positive news there. They're going to fund themselves, right? They always fund themselves. So that it's not any, it's basically a theater, right? It's basically a theater, but markets do just soften a little bit until that's sorted out. Bitcoin especially. But look, NASDAQ all-time high, S&P all-time high, gold all-time high, Bitcoin all-time high. Don't worry about it, right? Just keep buying assets, because you can't be in the fiat currency. So I think things are looking pretty constructive right now. Things can happen that we can't prepare for, but things are looking constructive. So that's good news. If you trade Bitcoin and crypto, check out the Bybit link down below. If you're a new user on there, via that link, you can get a huge deposit bonus when you sign up and make a deposit all the way up to $30,000. If you can't trade on Bybit, Apex is a DEX spun out of Bybit. So you just connect your wallet and trade on here just like Bybit. $10,000 deposit bonus and a permanent fee discount via the link below as well. Remember all of the volatility around the tariffs and the announcement of those, and obviously their attacks, so markets go down. And now we've recovered that whole thing, and now we're basically at all-time highs again. This is a Bitcoin exchange rate with dollars. This is the exchange rate that we look at most of the time, but it's only one exchange rate. Now you have Bitcoin growth, but you also have dollar strength or weakness here as well, because this is a dollar exchange rate. So it's both sides of the trading pair are important. Bitcoin has growth, that's obvious, but the strength or weakness of the dollar, or the rate, the year-over-year change, or the month-over-month change of debasement, or the market's anticipation of debasement or not, drives the exchange rate between dollars and Bitcoin. Right, and so the market realizes now, it's very clear that even though, look, they're trying with tariffs, right? They're trying to earn extra income. They're trying very hard. They're trying to bring manufacturing back. They're trying to bring economic activity back, which means that you can tax that economic activity. They're trying, so fair play, but it's just not, it's a drop in the ocean. You've got customs duties here of 30 billion, which I assume is the tariffs, maybe excise as well, you could add to that. The deficit is 345 billion. So you're looking at around about 10% of the deficit earned in customs duties, right? There is a huge deficit here. The net interest is 93 billion. You're paying more in interest in national defense. By the way, this looks pretty much similar for all Western countries, right? So just the US is the most important one in terms of the Bitcoin price and asset prices generally. It's kind of unsolvable. I don't know how you fix this, right? You've got net interest here, which is more than national defense. There's nowhere from the money to come from. So what they have to do, right, is increase the amount of tax revenue, which means that they need to create inflation so that price levels go up in relation to previous debt they hold out. You can see the net interest. This is the full year, so fiscal year 2025, 2 trillion deficit, 2 trillion. And you've got customs duties here, 165 billion, 93 billion excise duties. They're going to annualize more than that, maybe 300, 400, 500 billion maybe. So look, they're trying. But the reality is the net interest is so high, the deficit is so big. it's almost impossible, right? So the market knows this now and knows that it's just the same old, same old. Left, right, doesn't matter who's in charge, right? It's the same old, same old. You cannot pay the deficit rolls on, and that's why the exchange rate for dollars is continuing to go higher. The game now, right, is that you have to create inflation to debase the debt so that you can just keep it rolling. And that's why we're in Bitcoin, right? And that's why we have these 4-year refi cycles. Otherwise, the thing collapses, because unless you keep printing, then there is literally no money left, right? You have to print the debt to pay for all of this on the right-hand side, and there is a deficit, and that's the difference, right? This is the difference. We essentially should completely collapse as a financial system, right? If the financial system can't wash its own face, it should collapse. And so we live with this constant fear of financial collapse. And that's because we inherently know this system, if left to its own devices, would collapse. We don't let that happen, and that's why we buy Bitcoin, right? Because if you're in cash or bonds, this is essentially a tax on anyone using cash or bonds, which is pretty much everyone, right? Corporates, we all exchange currency on a daily basis. This is a hidden tax that is paid, and that's it. So that's why you own assets, right? To try and get out of this, because this is completely unfixable, and we know it. And it's just this largesse right here that is paid for by currency holders. Now, unfortunately for the US, its trading partners, especially China, Russia, they don't really want US debt anymore because they don't want to pay this tax anymore, right? That is the thing. This deficit is essentially a tax, and whoever's holding the cash or bonds has to pay the tax. And China doesn't want to pay the tax anymore. And so who's going to pay the tax? Cash and bond holders, they pay the tax. Guess who's going to pay the tax? The US Treasury thinks stablecoin holders are great. They're rubbing their hands together because you've got new demand, they'll be paying the tax. So look, stablecoins are going to proliferate. They're very, very in demand. The US is better than every other currency, right? But someone's got to pay the tax, and it's going to be new stablecoin holders that will be paying this tax. So if you don't want to pay the tax, then you have to get into assets, right? And the whole game is to debase this by inflating prices and making sure that the liquidity remains. They can keep putting the debt somewhere and people keep paying the tax. So the US, as you can see here, this is global yields. US long bonds actually going down. That's actually very good news for markets as well. And it's just good news generally that long bond comes down. So it is. Others not. They're weakening the US dollar, and that's, I think, on purpose. That's good news for the system to carry on, right? You can't fix this. What you have to do is debase it and find liquidity. They're the only things, right? You need to debase it, you need to create inflation, and you need to find liquidity. And so that's what they're doing. So US bonds lower, dollar index mostly weaker. It's pretty good for risk assets. And as you can see here, currency debasement is a relative thing. So they all debase, right? But who's debasing faster? Who's debasing more, as you can see here? So that's since 2000, which is pretty insane. So minus 78% for the dollar, minus 75% for the pound, minus 73% for the euro. It's all a relative thing, right? So who's going to debase the most? Of course, you don't want your investment portfolio to look like this, all right? So get out of bonds, get out of cash. You have to be in assets. I think Bitcoin is the fastest horse. And it's really important to figure out relative increases, right? So looking at Bitcoin versus dollars, it's what we all do. But really, we should be looking at Bitcoin versus gold or Bitcoin versus stocks, because that's the choice, right? The choice isn't an asset versus paper garbage. The choice is, which asset do I buy? Which is the safest, most reliable, etc. Like if you've got house prices up 90%, but the US money supply is up 83%, then those house prices basically haven't gone up. You've outperformed people that don't have a house, right? Young people looking, saying, wow, this is absolutely insane, right? Like house prices going up. So you've outperformed young people that can't buy a house, but you're not outperforming, right? You're not gaining in purchasing power, right? So what I want to focus on is this chart right here. So we've got Bitcoin in orange, gold in yellow. We have in blue here, crypto total market cap. This is total 3, so minus Bitcoin, ETH, and stablecoins. What else we got? S&P 500 in red here. So for the most part, if we go back to maybe the last year or so, as you can see, we have gold outperforming everything else. So total market cap's up 24%, Bitcoin's up 23%, gold 40%. Unbelievable, right? So what's happening is that China is recapitalizing upon gold. You can see that. In fact, this right here, we can see Shanghai Futures Exchange gold inventories, right? They're recapitalizing on gold. That's what they're doing. Now, they have a lot of income in dollars, and they don't want to buy the bonds anymore, right? They don't want to get taxed anymore. They've said, look, enough's enough. We don't want to get taxed anymore. If we hold these dollars, you're going to tax us 2, 3, 4% a year. So we just want to hold gold instead. So that's what they're doing, and that's the outperformance here, which is great news for gold. If you just take a little bit of a longer outlook, right? What we have here, which is since 2021, gold, S&P, NASDAQ right here, they've definitely outperformed cash. But then you're looking at other assets that just simply have way more growth, right? You've got Ethereum, crypto market cap, and Bitcoin, right, outperforming. So long term, if you're looking at long-term investment, right, 5, 10 years further, Bitcoin has way more growth. Even crypto market cap. I don't know how you invest in crypto market cap. It's like 4,000 coins, right? But in any case, you have to invest in the winners, right? You know the winners, right? You know the winners. Bitcoin is going to outperform gold over a 5, 10 year time horizon, even though gold is doing so well. But it also means that since 2022, 2021, the S&P and the NASDAQ have actually gone down in value, right? Even though they've gone up in dollar terms, they've actually gone down in value in gold. And that's important because, yeah, I see on the news every day, NASDAQ all-time high, S&P all-time high. And I think to myself, wow, we're in the matrix here because we're valuing it in paper that's printed. Of course, it's always at an all-time high. Everything's always at an all-time high. If you're investing in assets, you have to look at them relatively. And S&P and NASDAQ have not outperformed gold, and therefore they have gone down in real value. Real assets, real money that central banks use, they've gone down in value. They've lost purchasing power versus that gold. So that's it. And Bitcoin has outperformed. Ethereum has outperformed, and even total market cap has underperformed, as you can see here. But it's so volatile, right? It's just so volatile. That's why you have to have a much longer term view. But we know who the winners are, and Bitcoin is certainly one of them. This is the bigger picture, really, which is you can't be in bonds, you can't be in currency, because they're all at it. They're all at it. They're all doing it. It's just the difference, the relative difference between each one. What one do you want to be in? None of them. They're all going down. They're all going to zero versus Bitcoin and other assets, right? So that's the game. And digital gold, Bitcoin, is the outperforming asset. Clearly better than gold for many reasons. You have much more sovereignty over it. And it is going to eventually, I believe, be that sovereign store of wealth. But it's way too small right now, which is the opportunity we have. 2 trillion versus 20 trillion for gold. And I think it grows into that size of market cap as well over time. And it has all the characteristics, even better than gold. And it's the best performing asset in world history. It started at 0, it's now 115. I think it just goes 10x from here, right? In relative terms as well. So versus gold, it increases up to 20 trillion. By the time it gets to 20 trillion, gold could be 50 trillion or more, right? It's all paper. You're measuring in paper, which is infinite. You just have to measure gold versus Bitcoin, Bitcoin versus stocks, which one's going to outperform over 10 years. It's got to be Bitcoin, right? If you trade Bitcoin or buy Bitcoin, you can get a massive deposit bonus from Bybit by the link below, and a deposit bonus and permanent fee discount if you want to trade on Apex as well by that link in the description. I'm James, it's MoneyDG. Cheers for watching, and I'll see you in the next one.